Two sectors moving higher since Trump's victory: infrastructure and railroads. There's a lot of optimism around some big league spending plans for infrastructure, which may also benefit railroads, who then have to carry around all the big stuff. So what are the money-making opportunities for you? Let's find out. Kathryn Thompson of Thompson Research Group is here to talk infrastructure, and Jim Corridor, equity analyst at CFRA Research, is looking at the rails. First, let's dive into infrastructure. Kathryn Thompson, first off, Mario Gabelli, you know Mario Gabelli, the investor, joined the team on Squawk Box today, and I want you to listen to this. Here's what he had to say about the sector.
We need to clean up our waterways. We need to inland waterways. We need rails. Everybody's talked about. So how do you play that? On Wednesday morning, the infrastructure stocks jumped sharply.
So I want you to actually answer, Kathryn, Mario Gabelli's question. How do our viewers and listeners play that?
Best way to play it, in our opinion, are the aggregate stocks. Whether you're going to be building a road, or you're going to be beefing up rails, or if you're going to be building out waterways, is going to be the aggregate stocks. So those top names would include Vulcan Materials, Martin Marietta Materials, Summit Materials. Another ancillary play is a company called Headwaters, ticker symbol HW.
You know, you and I have talked about infrastructure for a while, Kathryn, and we did get a big spending plan last year, the FAST Act. I think it's about $305 billion over 5 years. It looks good, but when I look at the returns, Summit, SUM, the ticker, stock's up 20-some% already this week. How confident are you that the gains aren't already baked in after what has been really a monstrous couple of days?
Listen, that's a great question. We are about to embark on potentially one of the biggest infrastructure spends the U.S. has seen since the end of World War II. And it's driven by three factors. One, which you addressed, the first long-term federal highway bill we've had in over a decade. The second, which not as many people really realize and focus on, are what we're seeing with state and local communities doing. They get tired of waiting for the Fed to step up, so they in turn have also passed meaningful infrastructure increases. The third, which is the big unknown, we have some numbers thrown out post-election, could be an infrastructure spend from the new president-elect Trump. Keep in mind that infrastructure was important for both candidates, but when the rubber hits the road, so to speak, is what President-elect Trump will really lay out. He's currently thrown out $1 trillion over 10 years. If you were to look at that relative to the Obama stimulus plan, back when you and I spoke about 8 years ago about this, the Obama stimulus plan was a little over $800 billion over a 5 to 6 year time period. So the Trump plan, from a dollar standpoint, may not be too far off from a dollar standpoint.
Okay, Kathryn, before we run out of time, Summit, Aztec, Martin Marietta, you named those. You also mentioned Headwaters very quickly. I'm familiar with the others. They literally help you build roads. Who is Headwaters, and why is that stock a good buy?
Headwaters is a company that one of the products it make is fly ash, and it's a substitute for cement. We're quickly running out of capacity. We're essentially at 100% capacity utilization for our cement plants in the U.S. Fly ash is a less expensive but good product that can be used to displace cement.
Headwaters, there you go, concise. HW, the ticker there. We like Summit, we like Aztec, and some of the others. Martin Marietta, Kathryn Thompson, appreciate it. We'll see you soon.
Thank you.